So, Jenny, you have obviously done a lot in the startup scene as a founder, investor in corporate VC and in corporate innovation as well, I think. And now also as a part of Columbia's faculty. So before we go to the current investment environment, I want to give the audience a little bit of an idea about you and your story. So I have a couple of questions here about that. I guess the first one would be that were there like particular moments or like critical events in your career that led you into working in VC? Was there something you can pinpoint?
Yeah, it's a great question. Thank you guys so much for having me here. I think you're all doing like such great work at Columbia. I'm just like thrilled to be involved in this and everything that we're doing around entrepreneurship. So thank you. You know, it was interesting. I went to school at undergrad at Columbia so long ago, and really like students at that time were being tracked into, you know, you went to Goldman Sachs, maybe you went to, you know, to McKinsey, or you're a doctor, and you know, there just wasn't a culture around entrepreneurship. Interestingly, I came from a family that of you know, parents who worked for themselves. So they weren't tech entrepreneurs. My dad was a doctor, but he had his own private practice. My mom ran her own company. And so kind of my model growing up was very much around, you know, working for yourself, creating your own destiny. And yet, you know, I went to a school, it was so traditional, and I really kind of got tracked and, you know, into one of these more traditional industries. And I ended up, you know, at law school like you. And, you know, got out of law school, didn't really work as a lawyer very long, ended up in banking, and, you know, was always kind of coming up with like fun stuff on the side. Like I was just always thinking about like ways the world could be better. And a few years into working in banking, I realized that, you know, I had an idea and that like I was going to go for it. And it was really that moment that I realized like, oh, this is so interesting. Like your model growing up was very entrepreneurial. Then like you go to a school that kind of like really squashed that in me in some way, but like, oh, you need to go to law school and you need to become this like kind of professional in like some type of services. And I had this moment of like, hey, like I'm someone that is like very creative, and like marrying my creativity with my ability to execute were great skills that I learned, you know, kind of as an undergrad, but they haven't really manifested in that way. So I'd say that was the first moment. It's kind of a two-part question because I didn't start as an investor, I started as a founder. So that was kind of the first moment of a founder. To answer your question about, you know, as an investor, I started and ran a few companies. I'm not sure I'm the best founder out there. And, you know, we could like have a whole session on that. But, you know, one of the things that I realized I was really good at is I could really identify problems quickly and really kind of see through the noise. And I think as an investor, you have a large portfolio. I think my bio is out of date. I think I have about 135 or 40 companies now that I've invested in. And one of the things that I do is really help, you know, help founders kind of, you know, see the clarity through the, you know, through what sometimes seems like a very myopic experience, which is running a company. So kind of a long-winded answer, but those were kind of my two moments. One, really sparking creativity as a founder, and then, you know, really realizing that maybe my true calling wasn't starting companies, but it was helping other people identify things that sometimes they can't see.
Yeah, I think I can easily relate to that. Those were like kind of the feelings and challenges I went through as well. So I think that resonates with a lot of people that, you know, school does that, you know, and all your peers are going one way, you know, you put yourself in a box as well. And, you know, it's hard to break through that. That is, I can relate to that. So a little bit to your founding experience though. And I can assume that that's something you can leverage and use a lot in your investment career as well. Something that comes up, I Googled you a little bit, so a couple of articles. Switch Mobile, that was eventually acquired as well. Were you still working on it? I guess it was like between .com bubble, and were you still working on it during the financial crisis as well?
Yeah, I mean, so here's an interesting story. I, you know, I'm running this company, and I have to go out and raise capital. And so in 2008,
Yeah.
I march out to San Francisco, and people are really excited. We're in that first wave of mobile, and wow, you guys are kind of cutting edge, and see, like, your company is like doing well, and all these kinds of things. And so I was like feeling pretty confident that like we would be able to get a term sheet, and I was going to be able to come back to New York pretty victorious. Well, we all kind of know what happened in the fall. So went to raise capital in the summer. In the fall, the world falls apart, and so that actually wasn't going to happen. But it was a great lesson for me. Again, going back to what I said of like this idea of like controlling your own destiny. There's so many wrong things about taking venture capital, and there's some good things, right? It can allow you to scale more quickly and really kind of reach a different scale and magnitude. But really having strong business fundamentals are so important. And we see that obviously today in the pandemic as well. If you were just kind of fueling your business with Facebook ads, anyone can buy eyeballs, right? And so it was a good moment, a learning moment for me, where I was like, oh, okay, our company actually makes money. We don't have to grow as quickly as other people would like us to grow. Like, we can grow incrementally and we can still be successful, and we don't, we can kind of just do it differently. So.
Yeah. And this wasn't actually on my list of questions that you kind of brought it up. I hear that some founders are creating their decks for West Coast and East Coast separately even. Is the difference still there, compared to when you were raising, and that's a little kind of shortly, like, what's the difference there if you can pinpoint?
Well, I mean, when I was raising in 2008, it was like a world apart. I mean, honestly, when I was at Columbia, and way after that, like, I just didn't even know what was happening on the West Coast. Like, it was all my friends were at East Coast schools, and we were so kind of indoctrinated in the East Coast way. So even when I was raising, it was like so eye-opening, just the way people were thinking. It just wasn't. It was so different than in New York, where people were much more conservative, where they didn't have a culture of really, technology-driven entrepreneurship. Although there was always a culture of entrepreneurship on the East Coast, that was much more about, kind of mom and pops, I think, than, for the most part, building, rapid, scalable, system and software. So really, really different. And, fast forward all those years, and I still think there's a lot of differences, and I see it. And it's not just like, oh, the valuations are higher in San Francisco. That's kind of the manifestation of it. But I do think investors in New York, they often looking at different characteristics of founders, and I think that can actually be good. But I do find that there is a little bit of difference, the way people like to pitch, the types of characteristics that they have as founders, their experience. I find East Coast investors really appreciate when a founder comes from that business and really kind of understands the acute problems from a personal point of view. I don't feel like that's a bias in California, where people are pretty happy to, fund a 21-year-old who, has seized the white space. And so both things are good. It's just a different mindset.
Oh, that's an interesting perspective. And there's like it's almost like myths going on that, how West Coast is different and all that. Do you see that it's like East Coast is getting closer to what's going on the West Coast, or is the West Coast even getting a little bit closer perhaps to what's going on in New York? Do you see any of that?
That when I started my company, like, we all believed in the idea of globalization, but it actually wasn't the case. Like, people weren't just like getting on a flight to China every week, and companies, weren't as fungible in terms of like where their markets were. And I mean, I really, you really see that, now. And so everything has just gotten closer. I feel like all the tech ecosystems are kind of leveled to a certain extent, with slight fluctuations, but I think it's been super, super exciting. And part of that has been that capital has really been unlocked in many ways. Like, for so long, capital was constrained in the West Coast, but as we know, innovation is everywhere, right? And I think there are certain factors, including things like, like cryptocurrency and like pockets of wealth popping up in all different places, right? Like, that has really spawned innovation in a lot of those geographies. And I think that's really exciting as well.
Yeah. Oh, that's kind of cool perspective on that. going a little bit back on the previous topics we had and the bigger picture we have here, I wanted to ask you more about like the financial crisis in 2008. Is there can you pinpoint, is there like any big lessons that you learned from there that you can perhaps apply to this day? Or
I mean, as an
did you
entrepreneur, I had to kind of go back to the fundamentals of the business, like what was working, what was not working, and I couldn't rely on the fact that someone was going to fund me through those hard times. So I think,
yeah.
the lessons were like, you need to get to profitability, you need to build a sustainable business with a rock solid business model, and you need to have a product that people are dying to have, because if it's a nice to have, when they lose their job, they're not going to invest in it, right? Or they're not going to buy it. So, your customer is really what's important. And I think, now we're seeing the same thing. Customers seem to be very loyal during this crisis. If it's a must have, right? So it's that old adage, the vitamin, is it a vitamin or is it a painkiller, right? So I mean, painkillers people are still investing in, right? Vitamins, not so much. We'll see.
There you go. Is that something, considering like you have that background and experience, is that something that when you look into investing in companies, that is this a company that's going to survive? There's a statistical chance that there's a downturn in 2 to 3 years. Is this company going to survive it? Do you sometimes like consciously think about that aspect of the company and its kind of life cycle?
I mean, I tend to look at companies that have good, that at least have a plan for good fundamentals, as opposed to just like, those kind of really rapid growth. And I don't know if that makes me a good or bad VC, right? Because if you don't have a J curve, like, are you really going to utilize kind of the power law and really get those outliers? I don't know. So I definitely tend to look at founders that can build kind of incremental value. But I'm also an optimist, so I don't go around like, thinking about doom and gloom. Like VCs are incredible optimists, as are founders, right? So that's my DNA, is to think that like the world is just going to work out. Like things are going to be great. Like we may have hiccups, but we're going to get through it. So, when I meet a founder, I'm like, in 3 years when we go through an economic, like, not really. But I do gravitate just naturally to founders that are solving like, big problems. So if you look at my portfolio, fintech, healthcare, future of work, you'll see those themes throughout. And those are systemic problems that I think are universal through all periods of time. And, there may be kind of ups and downs, but I mean, healthcare, like these are things that, are not kind of like flimsy areas, right? Like there's a lot of regulatory hurdles. Like the founders that usually go into this are very mission driven. They have like a bigger thing that they want to solve. And like for them, this is like a blip in the road. Like, sure, this might be hard for a few months, but they're thinking long term. They're thinking like, I'm going to systemically change something out there. And that might be a 10 or might be a 20-year journey, right? So this is just a blip.
Yeah, it makes sense. And, depending on the company and everything, it might be you just got your funding round together. It might be a good thing. There is a lot of competition going on right now. It might be a good thing for you. Who knows? Or your business might be good for them. Yeah, that makes sense. Did you, by the way, start your investment career as an angel? Was that the case?
Yeah, I mean, I think like most founders, you see a lot of good, interesting founders that are your colleagues, right? That are either working alongside you or that you are comparing notes with, and you want to kind of support them. And so, when I got a little bit of cash selling my first company, instead of doing the practical thing, like investing it in something sane, basically like all my friends and all the people I saw starting companies, like I would just, put small amounts of money, and I didn't have a ton of money, so I couldn't write large checks, but I would just kind of seed some friends that I thought were doing really cool things. We were comparing notes. Maybe I was helpful. So I think that's how many founder angels start, is they don't consider themselves angels. And also, it's kind of an interesting thing as founders, you know, as I mentor founders now, and they're always like, well, where do I find the angels? And I'm like, there are very few people that walk around the world with a t-shirt that says angel, right? These are people that are doing their thing. I was running my business. If anyone would have said like, Jenny's an angel, I'd be like, I'm not an angel, right? Doesn't mean I wasn't writing these small checks, but I didn't think of it like that, right? So just something for founders to kind of keep in mind. There's very few people that really like are professional angels in any way. They're living their lives, they're running businesses, and you know, they're supporting people. Just the way that they're supporting it is that they're writing a small check.
That makes sense. Kind of a follow-up question to that. What are the differences between you investing as an angel and a VC, except that you might be probably a little bit wiser and have more data, you know, what works and what doesn't, but what's the difference you see there?
I mean, you do really well as an angel. It's hard, but you don't have to, you know, pay back investors. So, you know, I think one of the big differences with an angel is that you can do really well when you put in, you know, 100K and you get a 3x return in, you know, 3-4 years. Whereas like, so you can look at different types of companies, right? You can look at companies that potentially are not, you know, billion-dollar companies, and you can still actually do really well in your investment. So I think that's kind of a fundamental difference that a lot of people don't miss. Like as an angel, I don't have to invest in the next Uber. I can invest in a company that exits for 20 million and I can do really well on that investment. As a fund, like not so much, right? Those small exits like really are hard. You know, it's really hard to get the IRR that you want without, you know, a few of the outliers in your portfolio. So I'd say that's one of the big differences. And then the other thing is when you're an angel, like you're investing your own capital, there are no rules. You're basically helping founders because you want to help founders. And there really isn't that, you're not the steward of someone else's capital. You don't have a fiduciary duty to anyone else. And so, you know, now as a VC, when I make investment decisions, when I'm coaching founders, all these things, I do have to think about that as well. Like my responsibility, you know, the governance I have on the fund is really wearing two hats. And so there's a little bit more of a conflict there, which I think is interesting. I never really thought about that when I, you know, started institutional and, you know, when I started investing, not my own money. But you really have to think about it. This is other people's money, right? You've made you've made a commitment to, you know, to live by this limited partner agreement, right? And you need to live up to that, right? And that has responsibilities.
Yeah, so it's harder, but like psychologically and in practice, I guess, a little bit then.
Yeah.
Money around. That makes sense. Kind of related to that, I want to talk a little bit about Techstars as well. What's your like? I guess you had many roles actually in Techstars, so feel free to expand on that as well. But what's your investment thesis currently at Techstars New York?
Yeah, so same role at Techstars, interestingly, but I've run a number of our programs. So really, like one of the most fun things about my job is I get to learn as I invest. And so, you know, looked at different verticals that I was interested in. So fintech being one of them. So ran our fintech program, healthcare, and hard tech as well. So those were kind of areas that I got great exposure to through incredible founders that were building great companies. Techstars New York doesn't have a official theme or thesis. We're what's called the city program. So any company from around the world that wants to come to Techstars New York can apply. Traditionally, when we were running the program in person, we look at companies, international companies that really want a presence in New York where we can help open doors and connect them. We obviously look at local companies as well. And so it'll be a really nice mix. This year, it was interesting. I wrote a blog post about some of the themes that I was interested in, really around kind of health and wellness, you know, like owning your own kind of financial destiny and future of work. And then one that I call happiness. So it's like health, wealth, and happiness. And happiness just being this idea of like, wow, the world is really hard. Like, you know, having small moments of joy that technology can facilitate is like really awesome. So another area. So this was all pre-pandemic. This was in December. And then like, you know, the world goes crazy and I revisited those themes and I was like, wow, those themes actually really hold up. Like we obviously need to be putting a lot of resources into health right now and personal wellness. Like people, you know, 44 million people out of jobs, like you need to be able to figure out ways to control your own destiny and be agile in the way you work. And, you know, fintech's an interesting one because I think, you know, so much is about, you know, commerce in some way. And so you can almost see how fintech is now democratized across many verticals where it's all, you know, it's about payments and it's about transactions and commerce. And so that can be, you know, across any type of company. So yeah, I think those those stand up in this world, but we'll see.
Yeah, and I guess it like serves you well as like you having your own VC firm as well, to being exposed to all those companies coming through all of those Techstars accelerators.
Yeah, we get incredible data. I mean, and we see that what's interesting is that we see the trends kind of before they hit the street in many ways because we're seeing it in aggregate, right? And so we're starting to see like, you know, whatever we're starting to see, like large numbers of companies doing X, and we start thinking like, huh, this is interesting. It's so fascinating that we saw all these companies, you know, trying to do X. And then oftentimes we see those themes kind of play out, you know, in later years. So it is pretty cool.
And that kind of makes sense. And to be honest, my intention wasn't to actually give a shameless plug for Techstars here, but a lot of LPs that I talk to kind of appreciate like investing in accelerator funds because they like to co-invest and they get that exposure to a lot of different kind of companies and see kind of what works and what doesn't.
Yeah, I mean, I think Accelerator though is really just another word for early stage, right? Whether it's an angel group or it's something like our fund that we started or an accelerator, it's all just like, are you taking that first bet on a founder, right? And so whether it's through an accelerator or whether you're a prolific angel, it's all kind of the same thing. We're not looking at, you know, like I never even asked founders for financial models. Like we're really, you know, evaluating companies based on a whole different criteria, right? Which is like, do we believe that these founders kind of have a secret that no one else knows, that they can build a really impactful company around? And it's really evaluating, you know, their criteria, you know, their characteristics as founders. And that's a very different proposition than being a Series A investor.
Yeah. And I don't know if you already like selected this cohort for Techstars New York, but
yeah, we start next week.
Oh, okay, there. Congrats. There you go. Nice.
Yeah, we start next week. You'll see the announcement on Monday.
Okay, perfect. I'm gonna look through that. So did you consider like the environment changed a lot while I guess you were putting together your cohort? Did you change your criteria a little bit, even your like thesis for this year or something, when you selected companies?
I will say again, our class really, you know, really netted out to, you know, lots of health, lots of fintech, lots of future of work. But we did add a new category, very exciting, a category I had not invested in before, really, like very on the edges. One that is probably near and dear to all of our hearts. But I added an ed tech. So that's an area, my fund, we did 2 ed tech deals in the last, say, 2 months, and Techstars New York has an exciting ed tech company. So that's an area that's quite interesting. I think ed tech has been maybe like the poor stepchild of venture in some ways. Like everyone believes in it, but no one wants to put money in it because we haven't seen a lot of exits. And so, I mean, there are a few ed tech funds, but for many generalists, it's been quite hard. And so now in the COVID world of everyone being a teacher, everyone being a learner, you know, just the world has gone upside down. And I think it's been such an exciting time for ed tech. So I'm really excited that we're starting to really put investment dollars behind some of those solutions.
I'm actually glad to hear that. I guess I could like sense that kind of sentiment elsewhere as well a little bit. People got excited about that space a little bit again, but I'm glad to hear that you're doing that, and I really hope you're right because there's so many things to fix there. So the problem is obviously there.
And the problem's there, and I think like we're thinking bigger. Like it's ed tech, but it's also communities, and it's also all these other things. Like it's not just about how do I help a K through 12 teacher do their job better? That's very important work. But also, how as an individual do I educate myself in a new world, right? Where maybe I'm not going to university, or maybe I need to pick up a new skill or reskilling and all those things. And so I think kind of ed tech is blending with communities and future of work. And I'm pretty excited about where that goes as a society.
Yeah, I must agree with you. And then I'm gonna go to a little bit like serious topic here, even more serious than I guess downturn. And this is kind of a setup for that as well. You started when was it when you started your like VC career, if you will?
I started when I was at the BBC. I ran a venture and innovation group. So that was 2010, 11.
Yeah. Was there, I assume, how did you like break through? I assume that, VC has always been kind of a male-dominated industry and space. How were you able to break through that glass ceiling, or whatever you want to call it? Did you notice that?
Interestingly, corporate venture is actually not dominated by men.
Okay.
So that's like one interesting thing, and partially is because like many corporations have women at higher ranks, and there's a lot of like merit-based promotion. So I don't think corporate venture is actually dominated by men. But even beyond that, there's like a new trend, maybe in the last 10 years. Used to be that VCs were like all MBAs and like were finance people, right? And so as kind of the new era of VC came in, I would say the entrepreneur really has the upper hand. People want to see that you build companies, that you're an operator. And so with that, I think I was, like everything in my career, like pretty lucky, right time, right place. But, met a leader at the corporate venture who was really looking for what he actually called an outsider. And I was not looking for a job. I just sold my company, and I was like basically going to take a garden year in another country, and got kind of roped into it because I loved the mission of this company and really loved the vision of this CEO. But funnily enough, he was really looking for someone that wasn't the mold, that wasn't an insider of the company, but that really had kind of different ideologies. So that was kind of how I got in. Didn't expect to stay for almost 4 years. Like I came in and I was like, oh yeah, I'll like consult for a little bit. I'll kind of give you a framework that I think could work. And then almost 4 years later, there I was. So.
Yeah. Have you seen any, we're not here to talk about me, but I came from Finland like 6 years ago. My first stint was at the UN. And what did I do was like gender equality and women's empowerment. That was the big focus for the Finnish government if they wanted to do anything in UN.
Wow, you guys are just so ahead. I can't even imagine America being like, oh, we're in Finland talking about women's empowerment. Like, that's incredible. You guys are just like light years ahead of us.
Yeah, they're more worried about men there and they being isolated and whatever than women at this point. Is it? Yeah, a little bit. Have you seen progress here in the VC industry and space in terms of like gender equality? Have you seen a change in the past decade?
I mean, I think that the truth is, I feel like there is a lot of equality right? And the big if is like, if you have the capital to invest your own and create your own portfolio, I think you'll be judged by that portfolio. And I feel like that is, whether you're a man or a woman, I feel like your numbers are your numbers, right? Are you going to get into all the same deals? I think if you're a good person and you're out there in the startup community, you've built a little brand for yourself, like, yeah, I think you're going to get into the same deal. So I feel like there is a lot of equality on that level. The big if is like, are there, enough women angels who then are able, like if you're taking my example, like, women that are angels who are then able to start their own funds and all those things. So I felt very supported. I think the issues is more in the kind of entrenched venture capital funds, which have started, mostly with male, with men. And so then you say like, okay, let's bring in the next generation, or let's bring in a partner. And because, they're men, they kind of look to their networks, right? And so their networks are filled with, the same people that they are. So it's men, and it's mostly white men, right? So I think the problem that we all are facing is like, how do we go outside of our networks? And find other up and comers that we want to kind of bring along for the ride with us. And so, we all struggle with it in different ways. Our fund as well, where we have gender parity, which is great. We have 2 women, 2 men who make all the decisions. We don't have, parity around other diversity characteristics, and that's something that we're trying to address. But we have the same problems as other people. Is like we look around to our community, and it's easy to pull on people that look like ourselves. So definitely can't point a finger. I think we all struggle with it. I think there has been some progress, and now it seems like pretty much all of the venture funds on Sand Hill Road have at least 1 or 2 female GPs, and I feel like that's really good progress.
Yeah, I like that. And what Reddit was doing, and a lot of those companies there, what Slack is doing, of course, and a lot of forerunners there. It's I don't know, feels from a little bit from the sidelines that things are changing, and for the better. And I actually wanted to ask that question because there's a lot of investors and VCs here in the audience that struggling with this stuff as well. And your experience might somehow kind of translate of how to promote diversity in general, like either like champion that, or perhaps like carve your own career through that. Is there anything, you mentioned a lot of things there already, your track record that's how you judged and all that. Is there anything that you think that could like translate to better diversity in general?
I mean, I think it all comes down to intentionality, right? So it doesn't come down to like theory, like, oh, in theory, I want a diverse fund. I think like all the people on this call probably agree with that.
Right.
But the intention, like you have to be intentional, because otherwise you're just going to pull in the same people from your networks, right?
Yeah.
And so be intentional. Say in our fund, we said, when we set it up, we said we want the investment committee to have 4 people. It will always have 2 women. It will always have 2 men. It was no problem figuring that out. Like we made that intention and we executed on that. And so I think if you're intentional that we want diversity, then you have to figure out, okay, well, how do I get there? Well, I probably can't ask the 10 other white guys that I know, because they probably don't know a ton. But if I find some women and some people of color, they probably know other people. So I think a lot of it is like, A, set the intention, and then B, go out to people that potentially are in your network, but they're not like the people that you would go to normally to say like, hey, like, who would be good for my fund, make it one removed, right? Go to some other, go to operators. There's a lot of women and people of color that are operating companies who would be good to be, part of my fund or whatnot. So set the intention and kind of work backwards is like really what I'm advising people.
I think that makes perfect sense. And I'm thinking like, what Buffett says, that, you have to invest in things that to make sure that you don't miss anything. You have to have a diverse investment team, so you don't miss those big consumer exits and whatever, just because you don't invest in that, because you don't understand what's going on. And you probably shouldn't. So have people on board that actually understands all these spaces and what's going on. So I think I guess it's a good like investment strategy as well, if you think about it. Let me see. So we have, Grace, do we have some questions and people just can post questions if you have there, we can ask Jenny.
Yes, we have 2 questions from the audience. I can read them to you. How did you decide which startups to invest in as an angel when you were first starting, and how has that changed since becoming an investor?
Yeah, that's a great question. I think when my first angel check I wrote, again, kind of as we were talking before, were just like, other founders that I knew. They weren't even founders at the time. They were, people that were either, working, at companies that I knew, friends, and they were just like kind of ideating on things, like thinking of ideas. And, they kind of hit a good one, and I'd be like, oh, that's interesting. Like, if you decide to start a company, like I'd put a little money in there. That was really how I started. Again, now I'm a steward of other people's capital. And so I'm a little less casual in it. I still love getting ideas and inspiration kind of, from the ground up and from, the community, and really look to that in many ways. But, I would say my diligence has changed, right? So before I invest in a company, I do a bunch of references. I look at kind of the fundamentals of the business. I look at their docs, things of that. Again, a steward of someone else's capital, you have to really kind of check the boxes a little bit more and really make sure that that there's something more fundamental there, because you have an obligation to your limited partner. So I think that's quite important. And so that's really made me change as an investor, get a lot more buttoned up, and really just kind of do the diligence, because it's not just like losing Jenny's money or making a mistake. Like, this could really be, be detrimental, not just if the company doesn't work out, but think about all the other things. You don't do your diligence and it turns out this person's a bad actor, right? I mean, that's terrible. So you have to, this business is all about your reputation, right? That's why people give you money, and it's why people take your money. So you have to really be careful around that.
Great.
That makes sense.
Okay, so another attendee asks, what skills were most useful when you started investing at BBC, and what did you have to learn on the job, and how did you learn it?
Yeah, well, I didn't really know anything about institutional investing. So, like everyone starting out, you kind of like fake it till you make it a little bit. Like, literally, I found some great mentors and people that were running funds, and I would just, sit with them as much as I could. And there were so many people that really helped me. I was really embraced by the community. I basically called like every corporate venture group person that I knew, and I was like, hey, can you get on the phone with me for 30 minutes? I think they all felt bad for me. And after, the 30-minute call would last an hour and a half, and they'd be like, okay, Jenny, this is what you need to know. So like everyone, you have to just be an active learner. And so that was exciting for me. I always like to kind of be learning about the next thing. And I think the thing that worked in my favor is that, well, two things. One, when you work at a company, oftentimes you start to be a company person and you really play by company rules. And when you're an entrepreneur, you don't. So I think what worked great at the BBC was a lot of people really wanted that kind of raw feedback and, the real deal Jenny, which was, telling it like it is. And I think that was great, because when you're an entrepreneur in a big company, it's like, you don't care about like moving up some ladder and like all the other bullshit that a lot of company people think about. You don't think about any of that. You're just there because like you want to build, you want to make things better. And I think that purity of your intention like really gets you far. I did at the BBC. And so I had great colleagues. I just had, for most of it, kind of like a different agenda, right? So I wasn't looking to like climb some ladder, so I could just be myself. So that was great. And then I think the second thing is like when you're a founder, you're just used to doing more with less. And so if you come into a company and you have all these resources and people are working 9 to 5, like I worked my ass off and like we did so much with so little. And I think that is just a great way that you can kind of prove yourself, is like you can just, be different than other people.
Yeah, I'm sorry about that, but that was my phone, not Jenny's phone. So don't blame her. That ringing there. Well, one question I had actually about that, I was thinking this the other day, like the recession here was a little bit overdue. I guess we're gonna have a recession. It was overdue. It's been like over a decade now, and a lot of people in the investment space, at least during their careers, haven't been in one. So is there any like advice, for people that haven't been in the space for 10 years now, that should they panic? How should they look at the future during downturns and when they're happening and all that? Is there any like wisdom there that you could share?
I mean, I've lived through a bunch of cycles, and you've got to be resilient, I think, to be an entrepreneur, to be, a founder, or to be an investor. I mean, this is a long game, right? If I look at my portfolio, like the reality is most of my companies are not going to work out. Like, that's a weird business to go into. I'm going to give money, and I know that 90% of these companies are not going to work out. So, you know, you've got to be kind of a tough nut, I think, to, you know, to be a founder first and to be an investor. Like, you know, this is the harsh reality, but I think you have to be an incredible optimist and just always be thinking about the customer and building something that people love, whether you're like an enterprise software or something that seems like not consumer, or obviously when you're a consumer, but you always have that, like, I'm here to please the consumer. The consumer is my customer, not some other agenda. And, you know, at least you got a shot.
Okay, so to be resilient, don't panic, be patient. Gracie, do you have other questions?
And be focused on the right things, right? Don't be focused on the next fundraise, and don't be focused on, like, focus on your customer. Are you providing, like, be intellectually honest. Like, do people think your, you know, your product is okay, or they think it's like awesome, right? And so build products that people think are awesome. If they're not, then rethink it, pivot quickly, and like start something else. But, you know, just to kind of like do something and to do it is just, it's just like, this is too hard a business for them.
And for
coming in from Carlos Roca, he's a partner at Darwin Startups in Brazil. He's Techstars partner in Startup Weekend. He would like to know, what are the key learnings and insights from this COVID era in terms of valuation, investing, and keeping up a diverse, to keep a diverse team motivated. And then in addition, we have someone else asking about valuation models when analyzing startups. If you could elaborate on that.
Okay, so with the first question about valuations, I didn't understand that was the question.
Sorry, the question is, what are the key learnings and insights in terms of valuation, investing, and keeping your diverse team motivated?
Okay, those seem like very different things. My key learnings around valuations, I don't think I have any. So in New York, we haven't seen valuations come down. We haven't seen deal volume come down. Maybe the pain is coming in the fall, but we haven't seen much of it. So no learnings yet, except that founders seem to be resilient at the early stage. If you're investing at Series B and C, very hard to get rounds done right now. But if you're an early stage investor, we haven't seen too much difference. Keeping your team motivated, I mean, this is a great time to be spending with your founders, right? If that doesn't motivate you, then I don't know what will. Like, this is actually an exciting time to be an investor because you get to roll up your sleeves and help and really make an impact, right? And we've been able to impact many founders, you know, by helping, right? By introducing them to people, by providing more capital in a difficult time. You know, by really being there as a sounding board, by helping them figure out M&A opportunities and partnerships. So I think it's an exciting time to be a helpful, really value-add investor.
And especially for the LPs in the audience as well. Do you think this is actually a good time to actually invest in VC, considering that now you can see a little bit better actually which companies are going to survive, and there's less competition if you survive and all that? How do you see that?
I mean, I don't know. The data says that after the last, you know, economic downturn was the best time to invest. So any investor who's like not investing now, I think is kind of missing it. That said, if valuations are coming down, I mean, haven't really come down a ton, then, you know, maybe like waiting a little bit can also be helpful. So we're actively investing. Our second fund, we've done 12 deals in the last 2-3 months. So we're writing checks. We think this is a great time to invest. We're not investing in overpriced, like hot rounds that are just like, you know, no fundamentals. We're looking at industries differently. We're not investing a lot in kind of travel hospitality right now. So, I mean, I think we're being sensible, but, you know, again, the data shows that 2008, 2009, those were great times to be investing, and incredible companies were built there. And so you have to kind of have your eye out. So any investor that's on the sideline, like, I think might miss out on that.
And I heard this from other VCs, that other complication here in this crisis that we have, not just a recession, but I guess especially old school VCs, and this is all like hearsay to me, but, you know, because you can't see the founders necessarily now because of the quarantines and everything. Is that like making a lot of VCs hold back on new deals, or do you see that there's like a lot of VCs that are not investing
I
for
haven't
whatever
seen
reason?
that. I've heard a lot about that. Oh, we can't
Okay.
meet the founders, but my portfolio is not reflecting that. I've had probably half a dozen follow-on investments with investors who've never met our founders. So I think people are talking about it. Maybe feels weird, but I mean, we're adaptive creatures, and I feel like people have adapted to Zoom. I think the bigger thing is maybe I haven't met you, but do I know 10 people that know you and can vouch for you? And so I still feel like there's that. Like, people are trying to get data points from other people. Like, if I trust someone else and they can say, you know, Roque is this awesome guy, we've known each other for 10 years. I feel like they're gathering their data maybe in different ways, but I haven't really seen it be a massive inhibitor, although I've seen on VC Twitter so many people talk about it. How, you know, this is really hard, but I don't know. I haven't seen it in New York at the early stage.
Yeah. Are VCs investing less now, or like were they investing like 3 months ago when there was no visibility? Did you see that there was less like, let's say, seed stage, early stage investments? Did you see something like that?
I didn't like, I think when we see the numbers in aggregate, like, yes, I feel like a lot of people did take a pause. In my portfolio, interestingly, I have not seen it. So super, super weird at the early stage. I haven't really seen it, that there's been a drop off. You know, but I've heard so many people say that they haven't been investing heavily. So I imagine that it is true that people are. I can tell you, it feels like things are really kind of coming back right now, you know, both from the GP and the LP side. So we're closing our fund, and, you know, for a few months it was like, I don't even want to go approach a limited partner. It's just inappropriate. And now, like, some of them are calling us. So I feel like, you know, the world it seems to be, despite, you know, second wave type threats, it seems to be things are coming back a little bit, and feels like activity is also picking up on the VC side.
So after the initial shock, things are getting back to normal. And to be honest, I guess you have more information than you had 6 months ago, before everybody panicked. You have more visibility now.
I think the information that we have is that we don't know what the next is going to be. And so, you know, if you're a startup that has a plan that handled some type of downsizing well, or you were able to kind of weather the last few months, or maybe you were able to pivot, I mean, that's a strong signal. So I feel like those founders are great to bet on. And I think VCs are getting more comfortable in the uncomfort of not knowing, right? So I think many of us think that this is going to go on for another year. Like, we're going to have these fits and starts. We're going to kind of be in the world, but kind of not. We're going to have openings. We're going to have closings, but like, we're going to keep things moving, right? I think the stock market reflects some of this, this frantic, like, uncertainty as well, ups and downs, and not necessarily kind of correlating with what we're seeing. I mean, I walk out in the street and everything is still closed, but the world seems to be moving on. So.
Yeah. And this is my last question. Grace might have something after this, but I want to ask you, if you mentioned the education technology already, but is there, in your current portfolios, is there other companies that are doing like really well in this environment that you would like to highlight, perhaps?
I mean, anything in future of work is doing great. We just invested in a company that's, you know, LinkedIn for freelancers. Actually, we invested pre-pandemic in January. I mean, they're going gangbusters. We invested in a consumer company that's doing direct-to-consumer mental health drugs, right? Like, there's something that's pandemic-free. We all need our drugs to get us through this craziness. So, yeah, we've had a bunch of companies that are doing really, really well. Later stage companies, if they're at the B and C, if they needed to raise, I think in any category, investors seem like a little bit more on the sidelines. So I think it's also very stage specific.
Okay, that's interesting. Okay. Grace, did we have any other questions?
We do. We have looks like 4 questions.
Okay, let's go for.
One attendee asks, says, you briefly talked about the challenges in healthcare in terms of regulations. As VC, how do you view early stage health tech companies in the B2B space and their challenges in terms of figuring the right business model?
Yeah, I mean, healthcare is super exciting. And I think like most of the areas that I'm like really interested in, there are these barriers to entry. And so, you know, with healthcare, you have things like FDA and HIPAA, and then you have, you know, the full regulatory barriers. And then on top of all of that, you have the kind of cultural barriers, right? Which is if you have to sell into a hospital system, if you have to integrate an EMR, I mean, these are all very complicated things where they're legacy players who don't want you to succeed, literally. And the problem in our healthcare system is like we don't have aligned incentives. When then you pile on the payers, right? So you know, the insurance companies. So it's really the challenge is the misalignment of incentives. Some of that has been broken up in the last few months, which is awesome, right? So the telemedicine companies in our portfolio are exploding. Going to Rope's last point of like what companies are doing well, right? Because everyone's stuck at home, everyone still needs medical, you know, attention. And now regulations are actually changing to enable things like telemedicine, where it was before it was state by state and there was just so much friction. And so now that's getting a lot better. So I am investing a lot in healthcare. I think this is a massive opportunity, and I think the regulators are responding to it. You know, like I'm not sure they're responding enough, but they're definitely like leaning in. And like, you know, once we start actually putting patients first, as opposed to all these other agendas that everyone in the system has, I think we're gonna have a better outcome. So I'm excited. On the B2B side, again, lots of opportunities, and the friction is just always the misalignment of incentives, the long sales cycles if you have to sell to a hospital system or some type of provider. So.
Great. Alex asked, do you have any suggestions or advice for tech-based non-for-profit charity type startups? And what's the environment for raising money for such a project?
You know, I don't know too much about not-for-profit. I think, you know, that's a very different type of fundraise. So I'm really not the best person to ask around that. So I'll defer that question. You know, I think that if you, you know, if you've got a good value proposition, people are, you know, are pledging their money in many ways right now. So it is maybe an exciting time to raise, but it's not a space that I focus on.
And I guess sometimes I see that when you have that mission and you talk to investors, just otherwise, they can tell you, oh, there's a business model here. And it might be a good way to actually realize that mission that you had in a better way than it was. Like, talk to people, I guess. That's the
thing. I mean, I invest in a lot of impact companies, but they all, you know, squarely tell you that they are for profit. They're there, you know, for double bottom line, but they want to make money for their investors. That's a whole different story. And I think, you know, that's a very exciting space.
Right.
So keeping with tech and going towards VR, Anne Karina, seeing that the pandemic has forced us to operate more virtually, have you seen an increase in intention or investments for VR companies? And are people using VR, like doing things in an interesting way?
Yeah, so we're Techstars investors in a company called Obsess, which is helping retail, especially fashion retail, utilize VR and AR. So that's a cool one. They're doing really well. And that was, you know, Neha launched that company a few years ago. And I feel like people were a little slow to uptake, but now, you know, that's the world we all live in. So I do think it's an exciting time around AR, VR. I feel like the technology has finally caught up that you could have good, faster experiences. And so I do think you've seen more companies leaning in. And then like lots of virtual experiences around communities, right? So, I mean, the number of tools just that people have approached me like, oh, you could run your accelerator using this tool or that tool, you know, collaborative. It's not just about Zoom. It's about, you know, how do we now activate these like interactive virtual worlds? And that's some pretty cool stuff too. So, yeah.
That's exciting. So 2 final questions that we'll take. Do you use any valuation models when analyzing startups? And what are your sourcing channels for finding new startups?
No valuation models. Like at the pre-seed, like your comps are really like what other companies are being built in similar spaces at a similar stage. So you're really looking at market comps. And, you know, you have to be, it kind of leads into your next question is like, I'm across a lot of companies. Between Techstars and my fund, like my inbox is full. And it's really my job to synthesize that information, see what founders are building, and see how they're being priced. And then that's, you know, how I'm kind of thinking about valuations. And again, it's very market driven. Sourcing, the best way to source is like really create a brand for yourself. And then the deals kind of come to you. So if you're kind of just starting out, start blogging, right? Start, you know, creating some chatter on Twitter, like start leaning into the community. And then really interesting deals will come your way. And then, you know, just kind of work with a few founders and just develop a good reputation. People like to work with you because of X, right? You know, people like to work with me because I can really help them around fundraising strategy, because I can really tell them like it is, like I just, you know, give them exactly what I think, and like people appreciate that, right? And so people send me a lot of deals, not just because I can write a check, but, you know, because founders need a lot more than that. So like kind of develop your own brand, and I think the deals will come. And then obviously, you know, there's so much stuff online right now. It's kind of exciting. You don't need to leave your house and you can source tons of stuff. I'd say I'm doing, you know, probably 3 or 4 pitch competitions a week where I'm a judge or somehow involved. So there's so much stuff out there where you can just, you know, start viewing a lot of things. You'll start seeing the same founders at different events. And yeah, it's just a great way to kind of tap into networks that are outside of yours right now, because you don't actually have to go anywhere.
Great. And this last question is the most valuable skills you learned in school or your previous career that helped you build your reputation as an entrepreneur/investor.
The most valuable thing I learned in school, I think, was like, just, you know, just lean into what you feel good about. Don't try to, you know, be anyone else. Create your own destiny, your own brand, and like, just don't worry what other people think, right? And that'll be something that's really special.
Great. Okay.
All right, guys. Well, thank you so much.
It's like a free MBA
thank you so much.
Thank you.
Both Jenny and Rupe for joining us this evening. It's been great and a wonderful conversation. So thank you again.
Awesome.
Okay. Thank you, guys. Okay.